Hey there, this is Zach at UW Blockchain Hacks, here with Tyler and Philip from the Block Venture Coalition. These guys have been awesome in the space, kind of creating this at Carnegie Mellon, growing it for all these years. Super glad to have you guys. To kind of start it off, I'd love to hear kind of about a little bit about yourselves and how you got into the space.
Yeah, I mean, I'll kick it off on my end. Yeah, I mean, it really goes back to actually Carnegie. I mean, I think Phil is probably the guy who got me to go down the Bitcoin rabbit hole. So it might be, better coming from him to tell a little bit about the founding of the Carnegie Mellon Blockchain Group. But really for me, it was just learning about the space nights and weekends. Heard about Bitcoin first from him, and then really just kind of the interdisciplinary nature of this space. You have the combination of tech, programming, economics, game theory, how people behave, psychology. Just the intersection of all these different ideas is what really kept me within it. Like the understanding crypto networks, future business models. I really just kind of fell in love with that stuff and have dedicated my life to it. So Phil, I mean, probably your context makes a little bit of sense to talk about the CMU aspect and the university angle. So I'll kick it over to you.
Yeah, hey guys. Yeah, and thanks, Zach, for bringing us on. Just a little bit of context around CMU. So I co-founded the Carnegie Mellon Blockchain Group. That was like end of 2016, early 2017. We kind of pretty quickly grew up to around 100 or so members. And that group ended up becoming like a full-fledged research department at Carnegie Mellon called Scilab, which has around 20 or 30 full-time researchers. I got sucked into the Bitcoin rabbit hole, actually from one of my friends at PNC, which is where, I interned doing institutional asset management there. Ended up, kind of going down the Bitcoin and Ethereum like rabbit hole. I was a huge Ethereum fanboy to start. And, I've since like kind of oscillated between like Bitcoin, being a Bitcoin maxi, and like Ethereum. And, I've ended up just kind of realizing that, there's a ton of different applications in this space, which are all really cool. But both Bitcoin and Ethereum have their own space. But essentially, kind of Tyler and I started the Block Venture Coalition about 2 years ago. I had a bunch of different relationships from my time being the Carnegie Mellon Blockchain Group president with other blockchain groups. Tyler had his own network on the venture scene that was pretty impressive from his time working at a venture fund called DDC, which just raised their second fund called Struck Capital Crypto, which is a $75 million fund based out of LA. So I ended up we were working on that kind of as a side project my second semester of my senior year. Ended up scaling that up, and I started working at PNC doing institutional asset management full time. Did that for about a month and a half before things started lining up on the block venture side, and that really started taking off. So gave my 2 weeks at PNC after about a month and a half or 2 months there, and ended up moving to New York City. Ended up kind of being full time on Block Venture, and then Tyler ended up quitting his job at Deloitte, and then we were kind of just fully in the rabbit hole from there.
Wow, so that's kind of amazing to hear, and you summarized that so nicely and made it sound so easy, right? Like you were just interested in Ethereum, and now you have this Block Venture Coalition. I'm sure it wasn't always as easy and seamless as you just made it sound. But I have to say, I think watching the space evolve since when I first met you guys, and really the people in the clubs and coming to the meetings were people who wanted to see the price of Bitcoin hit $100,000. What I've noticed is that those people are still around, but there's just more types of people now who are interested in all different use cases. And I've kind of wondered for you guys, you talked about being an Ethereum fanboy. Like, do you still consider yourself kind of an Ethereum fanboy, or do you feel like that's kind of like a smaller piece of what you do now? Or is that kind of like, do you still hold that kind of inside, like to your heart? I don't know. Just kind of wondering.
Yeah. Well, my personal thesis is that, Ethereum as it's currently structured is, I think its network effects are going to be pretty hard to overcome, just in terms of dev mind share. The token itself isn't really, built to accrue much value. People, transact into it, pay for their gas fees, and then, quickly, will sell whatever else, they don't use, right? But, Ethereum, with the upcoming proof of stake, I'm actually, I'm bullish on, their ability, the token's ability to capture value. I guess kind of on the other front that you mentioned, with there being lots of different people in the space, yeah, it's definitely, I would say the landscape definitely has changed since 2017. It's matured quite a bit. On the university front, we've had, I saw like, when we grew to like around 100 or, so members, essentially like, there was like around 20 or 30 people, in like early 2017. And then pretty much everything started getting crazy in this space, right? We got a lot of like moon boys who came into the group, who just came in and were like, hey, what's the next Bitcoin? What's the next Bitcoin? Right. And so, it's not something that, we really want to do kind of, have as a group, around like our thesis, right? We wanted to talk about DLT tech and, the use cases that it opens up. But yeah, you get a little bit of that, and you're going to keep getting a little bit of that. The number one use case of crypto assets today, and, some people say, it's arguably only this, besides DeFi is speculation. Like speculation has been the number one use case. Exchanges have made all the money, for the vast majority of the money, with a few others, right? Like with custody, which also kind of revolves around speculation, for people who are buying these assets right now. But essentially, yeah, those are kind of like my thoughts around those. I definitely think that, but yeah, definitely agree that the space has matured quite a bit since 2017.
Tyler, and I'd love to bring this kind of around to your end on the the kind of the venture side. Philip mentioned that was kind of your piece in this. How would you describe the space now? I remember in 2016 or 17, when it really started pumping, it'd be like if you had any idea, you could just get like a couple $1 million, like no problem. Money was just flowing into the space from all these ICO projects. How's funding right now? Like what, you just mentioned the fund raised 75 million. So there's still money there, especially when we're in the middle of a pandemic. So I guess it's pretty crazy, but how would you describe kind of that aspect of the space in the last 3 years? Like has funding been there consistently? Has it come and gone? Is it more institutional now? Just would love to hear your thoughts on that.
Yeah, hey, that's a great question, and it's something that is constantly evolving. I think there's broader macro cycles, and then within that, there's also smaller investment trends. So, and actually, there was Philip and I have been talking about this for a while, just in terms of the space. Kind of like I think Andreessen wrote a post on it the other day that kind of describes this macro trend that I'm referring to. I think they broke it up into like 4 or 5 steps. Basically what you have, almost like every 4 years, with the halving is, some sort of Bitcoin price increase, that ends up occurring just due to like all the checks and balances and, the algorithm and kind of this decreasing supply that we have that's fixed. As more people learn about Bitcoin, the price kind of goes up, and, that's kind of, the nature of an inelastic good like Bitcoin. But, you have Bitcoin's price that goes up. Kind of the second phase in this trend is, more people start talking about it on social. They start talking to their friends. They're excited about it. The third step is, hey, more engineers and technologists come into the space and start building. And then the fourth and fifth step is kind of like, okay, the investment comes in then, and then the cycle kind of, continues into the next phase. The next 4 years, we have the next halving. So that's kind of like this little effect. I think Bitcoin kind of still dictates like the majority of the market. Everything is still kind of priced in Bitcoin. Some people price it in dollars, but a lot of the trading on exchanges is done in Bitcoin. Within kind of these smaller cycles that end up happening every few months, we'll see a lot of interest around key areas. I mean, kind of the first one that I remember being on the venture side was there was a period of like 2 or 3 months where there was something called a token curated registry. And people loved talking about the idea of having skin in the game. And it was really kind of this experimental phase where people were messing around with a business model where you could stake a token to a network and you have to contribute, some source of truth. If people within the network say, I think that's incorrect, this person's lying, you would be slashed and you would lose your stake. Now we're still very far away from a fully decentralized future, as it's, a lot more, practical to imagine at this point, 2 years down the road, and we see all the use cases that have been built out. But for like a period of time, that was like the big talk on the venture side of things. We've had, kind of this current phase, I would say right now that we're in, which is around DeFi. We have a ton of, stable coins and things that are locked up in these smart contracts, related to DeFi. We have borrowing and lending protocols coming out. I've even seen fundraisers for DeFi focused funds where they're trying to, basically aggregate all of these protocols behind the scenes and pay out like a fixed income product. DeFi is all the hype right now, but, something that kind of concerns me is, just the security of it. We've had, a lot of different hacks. As more money comes into the space, there's going to be, people who try and take advantage of algorithms. And because this code is law and there's math, anyone who can kind of find a loophole in it, may be able to exploit it. So, I don't think this is going to be the end of DeFi. I think there's just, cyclical trends that occur. DeFi is here to stay. There'll be hacks. There'll be, maybe a hack will, create a new cycle for security and custody to come about. And then people really start thinking about how do we innovate around private key management and things like that. I think that's going to be, a phase that kind of comes up in the future. So, in terms of an investment, I think the second part of your question is, has it always been there? And no, it definitely hasn't always been there. We speak with a lot of different investors. Sentiment, people are very emotional just by nature. Everyone is. And, we try and not look at coin market cap too much because we don't want like kind of the overall market sentiment to kind of reflect in our decisions around, whether this company is good or bad. But, naturally some of that stuff does get priced into like something like a valuation. If Bitcoin is doing great and the space is really hot, valuations are going to start creeping up a little bit. So it gets more expensive to get into a round. Whereas like if coronavirus happens, like kind of like where we're currently in, people are a little bit more, risk averse. They don't want to put money into a project. So, naturally valuations are going to drop a little bit and it's going to be harder to find a, investor to invest in your project. But, we found storytelling is very powerful. It can kind of go both ways. If you're at home and people are using technology and, find that the supply chain breaks down, maybe that is a, positive case for something that can be built on the blockchain. You need, more robust systems. So it's these constant narratives that are battling back and forth to, figure out what's the winner and things like that. So I hope that helped answer your question.
Yeah, that was a really, really, really detailed answer. And I thank you for that. And, I think you mentioned how use cases could come alive right now, basically due to the pandemic. And I think that's a good point. Because of the innovation that's happening. I mean, we're being forced to innovate in new ways and really be held accountable for where things are coming from. Because I think after this, people are going to be more concerned than ever about the supply chain, especially from where it comes from. They want to make sure they don't get sick or they eat something unhealthy, whatever it may be. So I think definitely we're going to see more adoption after this. Kind of as, some final thoughts in the space for students who kind of want to get into this space, either working in it, creating their own company, projects, etc. Kind of watching you guys, your success story, what would you tell them? What advice would you give them just to kind of finish this off? I think they would just really appreciate some advice, any advice for graduation students and those who are going to continue.
Yeah. So I've got a few pieces of advice. I mean, it's hard to they're all a little bit different. So the first piece of advice that I would give is just get started. The space is ever changing, just in life, it might seem complex and like there might be a lot of people out there who seem like they know what they're doing, but behind the scenes, we've gotten to interface with like a lot of different people and this space is developing every day. Like you can put your mind to it, just start with the problem, figure out like what solution you have in mind and then break it down into simple steps. You're not going to build, the next, layer one Ethereum competitor, overnight. It's going to take a few years, but over those few years, you can get really involved in the space and build out your own brand. And the industry is 10 years old. So, in 2 to 3 years, you could be, a VP or the CEO of a company and really blazing your own trail. It's like that nascent still. We're still very, very early. So don't get intimidated by that. The second piece of advice that I would give is that if you really want to get into the space, just be flexible and reach out to a lot of people, kind of take, this beginner mentality and find a way that you can contribute. Startups always need help. They're always looking for people to support them. It may not start off in a paid role, but you can really find your place and then leverage skills that you can take to, go to another company where it might result in a full-time job. So, Philip and I, we're big proponents in this idea of experiential learning, which is just a complex phrase that I think we read online somewhere. But what we basically think it means is you get skin in the game. You need to start working on something and learn by doing. There's a lot of theory that can happen in a class and things are easy in a test environment. But when you get out and you put an idea out there, own it, see if it works. If it doesn't work, don't have an ego about it. Move on to the next thing and figure out what works there. But you'll probably mess around with 3 or 4 things or 3 or 4 companies and, just try a lot of things until you figure out, what sticks and what you're good at. And, having a good, idea of that will help you move forward. If you have an internship and you don't like the internship, then you know what you don't like. If you try something on the business side or the sales side, or you want to be a programmer and it's not for you, well, then you rule that out and you can move on to something else. So I think just getting real world experience helps you figure out, what you want to do and what you don't want to do. And this space is very early, so don't be intimidated by it at all. But that's my 2 cents. I think, Philip, what are you kind of thinking in terms of advice, just with CMU and BVC stuff? I'd love to hear what you're thinking too.
Yeah, I mean, I'll keep it short. Really, I was kind of, as a sophomore and junior, I was sucked into the kind of investment banking, sales and trading kind of pipeline that everyone goes through. It seemed like, at least that was around me, where everyone was like, okay, first you need to get a boutique investment bank your sophomore year, then your junior year you got to go and get a bulge bracket so that your junior summer, so that you can get a return offer for full time, and then you can work at this bulge bracket investment bank, and then from there you can use your experience to go get an MBA, and then you come back, you start working at a private equity, and then pretty much long, when you're 30 or something like that, eventually you're end up making a lot of money, and you're set in your career and you're quote unquote successful. And stuff that I've realized is that for the people that I look up to right now are the ones that took quite a bit of risk themselves, who went off the beaten path. I think when you're young you can afford to take risks, and I think just for I personally realized my whole family's entrepreneurial. I knew I was going to be an entrepreneur from an early age, and it's just I tried going that route and I just realized it wasn't for me. And there's a lot of people who really love what they do in investment banking and sales and trading, and that's great. It's if you love it, then do it, right? But for me, I didn't want to waste kind of some of the the years of my life where I have the most energy doing something for someone else and making someone else kind of rich. And I had this idea that I was passionate about, and that kind of the stuff that I just talked about was kind of just always in the back of my mind, where I'm this is if I'm going to be young, I'm not going to be able to take on a ton of risk if I'm paying off a mortgage and I have 2 kids and stuff like that. So now's the time to take risks. Eventually you got to just throw caution to the wind and just go all in, and you put your money where your mouth is. Tyler gave his notice at Deloitte the day that Bitcoin hit 3,300, a year, I don't even know, a year and a half ago. This is before the whole Corona thing. So it was kind of a funny thing for us, because we just knew we were all in. We didn't really have much savings to draw off, but if you're really committed to it, just do it. And that's pretty much all I really got to say. There's a lot of other ways to make money. There's a lot of other career paths out there. There's a lot of opportunities, especially in blockchain. Keep your eyes out, and you'll see stuff. And if you see an actual opportunity, just go for it. Don't sit there and craft multiple iterations of a business plan over and over. Just go and do it. So that's pretty much all the the advice I have to give.
Wow, that was awesome. Thanks so much, guys. This was a great interview. Appreciate it, and hope to hear from you guys soon.
Perfect. Thanks, Zach.
Thanks.
Yep.